Hey everybody, this is Jose Blasco. We are about to get started. As always, I would love to get a quick confirmation that sound is good. The way to do it, quick message on the chat box, quick hello to everybody in the group. Not only it's kind to do so, that would give me the confirmation that you hear me well. So we are ready to go, guys. So we can start on time. So please go ahead and do that. Thank you so much. We have 10 seconds to go. Yep, very good. Sounds good, everybody. Very good. So we are live. Let me turn on the video stream. I almost forgot. I'll put myself here. My place, the bottom right side of the screen. That's my corner. How are you, everyone? Jose Blasco here. Welcome to the session today. Options with options. Today is April 22nd, 2021, and we are ready to go. Okay. Today, as we normally do, we're going to be looking at different opportunities in the marketplace. We have some work to do, though, because we have some trades. Actually, we have a key trade running with COP that require us to find trades kind of against it so we can hedge the portfolio. So again, we're going to be focusing on that when looking for trading opportunities. And from there, we'll be happy to look at any other trade. Okay, but I always want to re-emphasize the importance of having a well-balanced portfolio instead of just taking trades just because. So we're going to be looking at hedging what we have, plus adding more after we are in a safer position. Disclaimer on the upper side of the screen. Give me 1 second. I kind of lost my cursor. Here we go. So disclaimer, I am highlighting it now for you guys. Please read it carefully. This is important information. I am always counting on you to read the disclaimer fully without skipping any word because it has a lot of importance. So please take it seriously. Agenda, hello. We just said that. We are simulcasting. Again, if you are new, you will be wondering what is that. Well, that means that while the session is running on YouTube, it's also running on Facebook, it's also running in our private room in www.tradewithufos.com/live. And because those places are different places, so the latency, the video lags are different. And therefore, it's important that in order to interact efficiently, that you are on top of the chat box whenever we need to interact, you have questions, or you need to give me answers, or I have to give you answers. Again, it's important that we are on top of that chat box, okay? Let me say hi to Paul, Mark, Christian, everyone. So again, I was looking at the chat box. I didn't mention your names, but definitely it's good to see you all, guys. What else about simulcasting? It's important to know as well that the model that we follow with the sessions, okay, it's a hybrid model where on the public places such as YouTube, Facebook, the duration of such sessions is limited in time, where in our private room it's full duration. That way, for the ones of you that are very much into trading and always need more, always want more, so then you can subscribe as a coaching member, and you can access the sessions in our website in the private space and enjoy the full duration sessions. If you happen to be more what I would define as a part-time trader, for sure, still serious, but you have less time or you don't want to be that involved. So then I guess that limited duration sessions on the public streams would be enough for you. And everyone got the possibility to send emails to our support team, support at traddictiv.com, and be supported in a proper way. Okay, guys? So we welcome everybody. Let's begin. We're going to be looking at the market, looking at the trades we have, and then looking at new opportunities. Let's go for it. Let's go for it. Here we go. So looking at the S&P, the S&P is truly flat today. In one hand, the climate tells us, we've been talking about that for a long time, 18 out of 9. So this market should take a break, right? And go back down, get into a red climate to then maybe go back up. But definitely 18 out of 9, it's certainly not sustainable based on statistics. Having said that, okay, earlier today there was another green UFO here, and there are 2 more right there, and plenty more here and here. So again, the market has a tough time to turn and go down because there are many on-field orders to buy right below price, and every time it goes down a bit, the on-field orders kick in, and the market goes back up. So we are in that we have that type of market environment, which is to be respected. Okay, at the same time, no hope. If you are long and you think it's going to the moon, let's be serious. Probably it's not going to the moon, and if it does, it's not going to go on a straight line. So let's be realistic with what we have in front of us. Apply our trading plans. Make sure your exits are respected, and when it's time to get out, you get out. And that way, no emotional trading of any sort. The VIX is the chart I'm showing now. You saw yesterday the VIX hitting the 18 mark. Today we are back to 17 point something. There is one green UFO left that may push the VIX back up. This would be in line with what I just said, that the market should correct. So if the VIX was to push up, the market would probably go down and change climate at some point. At the same time, there is only one green UFO. Everything else is red. So we'll see what happens. Okay. Now the climate on the VIX is up. Okay, it's blue and confirmed. So that may have power enough to give that pause to the S&P going down for a bit. We'll see. We'll react to it. This is the market conditions. Again, the most important part of everything I said, because to be honest, while it's interesting to know what's going on in the market and what's likely to happen overall, especially if you're building portfolios with multiple, directional opportunities in it, that's obviously important to know. But at the same time, in the other hand, you would say that who cares what the market is doing, because in the end, I'm just going to apply my trading methodology and my rules, no matter if the market is going up or down or what. I'm just going to do my trading, right? Which is my methodology. So, in one hand, you could have ignored what I said at the beginning, but the conversation about the VIX, that one is difficult to ignore, because if options are so low price, that when it comes to looking for opportunities to sell options, like I did yesterday, and I will continue later today as well, we got a limited list, okay, here to look for opportunities. And most of the trades that we saw yesterday were a no-go. And the reason why they were a no-go is because when we looked at the premiums were quite deceiving. There was not much built in those options contracts, and therefore we were not meeting some of our key rules. So when you see the VIX going down, and this is the situation, so again, it's either the market's going to get very quiet, and therefore all the UFOs are very close, and then it's fine, or if the UFOs are going to be far away because there is some volatility, but that's not reflected in the options prices. So then it's very tough to find these credit opportunities, okay? And I'm going to start with that today because I need to offset, I need to hedge COP, which is a trade that is working well. But again, as I said before, there is more to it, isn't it? Because it's not only one trade. It's what about if you're running multiple trades at the same time? Okay. Siderman, all the CEOs and employees of the companies in the SPY want their stock prices to go up. Yes, and even if they didn't want to, they still have a percentage of their salaries to go into the 401ks, which are made of mutual funds, which are made of equities and stocks. So in the end, there is money being pumped into the stock market, even if the world is crazy, like it's been since 2020. I mean, even before that, but definitely the pandemic, I think it's something that would have us all agree that it's hurting businesses, right? I mean, some businesses became multimillionaire thanks to the pandemic, but I would say across the board, most businesses are hurt. So why is it that the market is going up in such situation? Okay, well, yeah, that's the answer, isn't it, Siderman and everyone? So again, if money keeps coming in, then it'll keep going up, okay? If the dollar keeps being devaluated, then you need more dollars to buy the same stock. So the price is higher too. So all of those are forces that are, that keep pushing the prices higher beyond fundamentals and everything else. It's kind of like the impact of money and money flow, and that's what it is, okay? But anyway, let's get into trading. These are definitely very fun conversations, but we need a little bit of chart time to go ahead and be able to plan the right trades and trade, okay? So COP, okay, COP is right here. We saw that green UFO yesterday. So when we enter the trade here, ideally you want that stock to to stay somewhere in closer to the midpoint. It gives you more flexibility for rolls and tweaks and everything else. But instead, it moved aggressively in another direction. Okay, now it's coming back up with a green UFO. So we'll see what's going to happen. If you were to look at the real-time P&L of this trade, it shows basically flat. It is not flat. We collected some profits already. Remember that we had 2 rolls on this trade, and we actually have a pending order to sell the 56 call at 31 cents. Why? Because yesterday we closed that 31 call, that 56 call, we closed it at a very low premium. We paid 5 cents to get out, and therefore now we want to sell it again if COP was to rally back up, and therefore the price of that call was to increase again. So notice that this trade right now only have 3 legs. Okay, only 3 legs. Okay, that number here is 0 because nothing has been filled since the order is still there waiting to get filled. Okay, it's a GTC, good till cancel order. I'm just gonna wait until something happens. Okay, now if I was to look at OptionStation Pro, so this would allow me to look into the accumulated P&L of the trade after the 2 rolls that we have already done. So let's start from there to understand better this trade. I don't think I'm going to add much more comments to what we discussed yesterday. It's going to be quite similar, I would say. But in any case, it's always healthy to go ahead and review what we have. And also, if you did not join us yesterday, so at least this is kind of a quick getting up to speed for you. So COP, very good. We are looking at the analysis tab. Okay, and what we have now is a net P&L of $37.5. This is where we're at. Okay, let me make sure I got selected the right one. Actually, it's not the case. It's the bottom one. The bottom one is the one where we have the 2 rolls. Exactly. Okay, notice I have 1 minus 1 and then 0 and then 1, meaning that that option is closed. Okay, and we are waiting to sell it again. Okay, so we are in that position with $74. Okay, this position has produced $72.5 per contract so far. And again, we are just there, and really it's the same chart that we saw yesterday. I don't have any additional comments. We are collecting $9.75 of time decay, so all looking good. So far. The only thing is it time maybe for a roll when it comes to the 50 put? Okay, and that's going to be potentially challenging. So let's take a look at the 50 put that expires in the 23rd of April. So 50 put that expires on the 23rd of April, that option got 34 cents of extrinsic value and has 18 cents of theta. And we got 1 day and a half to go. So 1 day and a half, if you take, 18 cents, okay? Again, I don't think we need a calculator to do this, but just to be visual, you take 18 cents and you multiply times 1.5 days. So that's 27, okay? 27 is the amount of premium that could still decay and be collected, okay? But notice how the extrinsic value is more, it's 34. So in other words, we are not hitting a situation where we are experimenting distorted Greeks. Not yet. Okay, and why is that? Well, the reason why that's the case is because being 49.74, the current price of the stock, that 50 put is in the money. Okay, and the closer you are to in the money, let's say the more realistic the Greeks will be, if you wish. And especially when you are approaching the expiration date, which is now 1 day and a half to go. So it's very, very close, okay? So it's not time to do the roll yet, maybe tomorrow, okay? Or if, let's say during the session, okay, my screen is frozen now, okay, so I'm gonna unfreeze it, now it's 77. If during the session this was to go back up, and let's say it goes to, I don't know, 50.10, 50.20 something, maybe goes slightly out of the money, next thing you know, we may come back here and check, and now we have distorted Greeks, and then we'll do the roll, selling the 50 put that expires in April, and that would provide 95 cents of extrinsic value instead of 33. Okay, but at this moment in time, we are still experiencing a greater rate of time decay on this one, 18 versus 6. And because it's not distorted Greeks yet, it is actually convenient and smarter to stay with the 23 expiration just for a little longer. Okay. Perfect world is that stock rallies. Like we need the stock to rally like 30, 40 cents, and then it'll be time to roll. But right now it's in the money, so you can see it's not time to roll yet. Okay. So we'll review that before the session is over. I may do the roll kind of on purpose so I can have it rolled and you see me do it so you know how to do it. So that way next week when we get back together, we have it rolled and we can comment on that. But I may give you the instruction actually for yourself to roll it tomorrow, okay, if that was to be the case. And when I say instruction, of course, I refer to educational instruction, okay? You, in the end, your trading decisions belong to you, but obviously from an instructional point of view, educational point of view, that's what I meant, okay? So nothing to be done on COP so far. We'll come back before the end of the session. The one thing I said is this trade is positive vega, so we need to offset right now on the portfolio. Okay, I mean it's very clearly seen here on Thinkorswim. I only have one trade running, so I need to add more. Right, the more trades we run in parallel, potentially the more money we make. But the more trades we add in parallel, the more risk we take, especially if they are correlated. So we want to add the inverse effect of correlation, which is diversification. And therefore we are looking for negative vega positions, okay, which are going to be, to be specific, iron condors, which I'm going to start looking for using, you know, the scanner, sorry for that, and I'm sorting the prices from more expensive to cheaper, okay? So Amazon, I commented yesterday why I would not use it. So then Tesla, I believe earnings were around the corner, exactly on the 26th, so we cannot do it. Biogen, we saw terrible liquidity in recent times, so I'm just going to skip it too. Caterpillar, okay, has earnings on the 29, so that doesn't work either because the closest expression that we can use is 30, so 29 doesn't work. What about UNP? UNP has April 22nd, as you can see here below. Okay, if you see me talk about earnings very quickly, it's because I'm looking down here. Next earnings date. ENPH. Okay, ENPH earnings on the 27th. Qualcomm. Let's take a look. Earnings on the 28th. T-Mobile. You know, I'm always a bit reluctant to look into utility companies because normally premium is very disappointing. If we find nothing at all, we may come back and check. FISV earnings on the 27th. Well, I mean, this is the other consequence. The VIX is going down, so basically, what are the very few stocks the scanner will find with options that are on the prices side? Well, those are going to be the stocks that, you know, most of the times earnings are around the corner. That's why options are pricey, okay? And Starbucks on the 27th doesn't work. AYX, let's see. May 4, okay? So now we may have something here. 50% probability, okay? 50% probability. Do we have anything below? Okay, so what's the situation with that stock? So we may need to load data starting, let's say, January 19, okay, to get UFOs below as well. So let me do that first. So January 19. Okay, here we go. Let's load this. And in parallel, I'm going to be looking at the option chain for that stock. We said AYX. Everybody's very silent, guys. You guys prove to me you're alive. Just say something on the chat box. Just you know, again, all is good is enough, but just get back to me if that's okay, guys. Well, I was thinking about that stock AYX. You know, I actually never executed a trade on that stock, and you know, it's when that happens, it's normally because it's very new companies or not so liquid. In this case, notice that we only have monthly expiration dates available. So yeah, so not ideal. Okay, so I'm just going to go back to my normal amount of data and go for AMD, which is the next one in the list. Okay, AMD, no, April 27, no good. Leland, how are you, my friend? It's good to see you. 511 for BHP. Unfortunately, at least based on what we see so far, probabilities are way too low, and this major distance between UFOs would be a major problem planning a trade. So let's take a look at pre and post market to see if we got more UFOs. We do, but probabilities are not good enough for us to take the risk. So we're gonna move to Western Digital, and then we got Las Vegas Sand. So let's see if those two trades will give us an okay setup. And if not, we know we're working on other trades. Okay. Very good, Paul. Thanks for your comment. And again, I don't mean to take you out of your comfort zone, guys. All the way. Especially trading is an emotional game, so being outside the comfort zone, like too far out of the comfort zone, is the recipe for emotional mistakes. So I certainly don't want to do that. But just to kind of measure that, you guys are following what I'm saying. And Paul, or any one of you guys, even if you don't trade options yet, your questions still matter. So if I go too fast, don't keep the questions to yourself, even if you don't plan to take the trades, because for you to take the trades one day, you need to understand what I'm doing. So feel free to ask, okay? Don't be shy, or anyone. Christian, how about buying a put spread? Yeah, if you buy a put spread, certainly you would benefit if the market falls. But a put spread is positive Vega. What I'm looking to build is negative Vega positions, okay? And therefore, buying a put or a put spread will provide me with positive Vega, okay, which would be more positive Vega to be added to COP. So I would prefer to offset my Vega first and then go for directional plays. Again, if I cannot do it, then I could certainly consider taking the risk of directional trades. Why not? But certainly I'm exploring first to offset what I already have. Okay. Ahmed, Jose, options is fun. The complex it will get, the more fun we will get. Yes, definitely. It's it's a great motivation that we get into more complex stuff, isn't it? Yeah, it's beautiful, beautiful. Anyway, Western Digital giving us 44%. This is not good in the regular session. Pre and post market is 37, so not good either. So our last shot is Las Vegas Sands. So let's take a look. We have to wait for the pending data to go away before we assess probabilities, even though 43% doesn't look good, so it does not with pre and post market. So last shot is regular session, which is indeed providing a very good probability of 54. Okay, now it is providing a very good probability, but the UFOs are quite far away. Okay, quite far away. So let me find out a bit more about. Wow, we have to load data all the way from 2010. Okay, guys, we have to load data all the way from 2010 to be able to assess that market. Okay, so 2010, and that is kind of like June 2010. Okay, so I'm gonna do it. Okay, I'm gonna do it because actually I think it's a good exercise. It doesn't happen too often that we have to do this. But let me tell you that if I was to do it now, like if I was to just go ahead and change the date, okay, to be 6 2010, and I hit enter, probably, actually I meant to type 6 like June. So if I was to do this and I hit OK, I'm very, very likely going to freeze my TradeStation. Okay, very, very, very likely. Okay, no worries, Paul. It's okay. We'll be here when you're back. LVS earnings on 7/21. Okay, yeah, that means that probably earnings were reported not so long ago. Okay, so if we look at EPS postings, they were reported. Let me see. Don't tell me it's today. It looks like it may be today. Yeah. Interesting. So if I use, okay, I need to use a candle that closed already to show it to me. Yeah. So here are the earnings, and this is 422, which is indeed sorry, yeah, 422, which is indeed today. So yeah, so earnings are today. So then, okay, before we work too much on that one, let me go ahead and confirm something. Because the implied volatility in TradeStation updates at the end of the day. So yesterday, before earnings, TradeStation said that Las Vegas Sun got an implied volatility of 46. Let's take a look at what happened after earnings. Typically, it will drop very much, and therefore it's just going to be a waste of time to try to plan the trade. But maybe not. Maybe it's still pretty okay. Okay, and forget about the one that expires tomorrow that shows 65. But everything else is showing about 40, where the average was 46. So certainly we had some drop of volatility. If we look at the prior times when we had earnings, so volatility went, okay, so earnings, let me make this larger so it's going to be easier. So when we had earnings here, that was on 128. So 128, we had a drop from 63 to 56. Okay, from here, the time before the drop was from 58 to 50. The time before the drop was 53 to 61. So an average of, let's say, between 6 to 8 points. And today we see volatility was 46, and now we see 40, okay, or 39. So it's another, 6 to 8 points. So the normal thing has happened, okay? So volatility went down because earnings have passed. So we're dealing with options that are less pricey than others, but definitely, 45% volatility when the VIX it's giving you 17. That means that there is premium built in that stock. Okay, so I think it's gonna be worth it to go ahead and take a look, and we may end up with an okay. Not sure, but we will explore that together. Okay, so again, back to the 55-minute time frame. The one thing I was going to do was to load data starting all the way in June 2010. Okay, but I was saying that if I do that, like that, just by clicking OK, I'm just gonna freeze my TradeStation. Okay, I'm just gonna freeze my TradeStation. So what would you want to do to avoid that freeze? Because when you load so much data and the UFOs have to process for so many years, again, TradeStation will not be able to handle it. So what you will want to do is make sure you disable AutoUFOs. Okay, you disable AutoUFOs, and with nothing in it, with nothing in the chart, now you load the data. Okay, now you load the data. So now I'm loading June 2010. Okay, and once it's loaded, I will disconnect TradeStation from the network and then process the UFOs. And then I will just draw lines on the charts, and then I will just go back to the normal amount of data, and then I will reconnect to the network. So I don't get to have TradeStation, suffer too much from a computing power point of view, because it's not about your computer. It's about the limitations of an application which is 32-bit, meaning that no matter how powerful your computer is, TradeStation cannot handle more than 4 gigabytes in the memory. And loading data from 2010 in an intraday time frame and running AutoUFOs on that may exceed what's possible with 4 gigabytes. I'm not sure, but it's likely. And if that was the case, it would freeze TradeStation. Okay, so it's a bit technical if you wish, and it's taking time for this to load because it's a lot of data. So hopefully, while it's a bit boring to wait, I guess it's something for you to remember, isn't it? When you load a chart and it's gonna last a long time, then the same is gonna happen to the UFOs calculation. So you wanna think about what I just said, which is step 1, disable the UFOs. Step 2, download the data. Step 3, disconnect from the network. You'll see how I do that. And then step 4, run the UFOs. That would be the right process. Okay? Cool. So just waiting a bit longer. By the way, Lilan, you should be in our room on the website, not on the YouTube channel, isn't it? You should send me an email about that, and I'll get back in touch with you on that, okay? Very good. So it's taking a long time. Okay. So you know what? In the meantime, let's go ahead and take a look at COP to see if COP went up. Okay, yeah, still trading at 49.77. So I guess we still have those non-distorted Greeks. So theta is 18, extrinsic value 34. All is the same. Okay, so yeah, nothing has changed. I was just trying to use the time wisely. Okay, here we go. So all the data has been downloaded. We don't have the PD anymore on the upper left corner. So now what I'm going to do is I'm going to use a command. I'm going to use the command line. And you can call the command line by typing on your keyboard, the dot. So you just hit dot on the keyboard, and that brings in the command line. And then I'm going to start typing the word offline. So OFF. And as I do that, I stop there, and here it says working offline. So I'm going to select work offline, and this disconnected TradeStation. So now there is no more new data coming in. So with that, I'm going to now run AutoUFOs. Okay, and this is going to plot all the UFOs above and below. Yeah, and we have plenty of UFOs above and below, but they are quite far away from each other right now. Probability is very good. That's very nice to see. And if we were to look at pre and post market, okay, here we go. 43% is not good enough. So then with Las Vegas Sands, we will want to use regular session, okay? So plenty of UFOs, okay, above and below, plenty of them. If I was to kind of measure the distance from current price to UFOs above and UFOs below, okay, so if I was to do this, okay, so again, I'm going to start with the below because I got less. So this is UFO number 1, and this is UFO number 2. So if I was to measure the distance from current price at 59.29 and the UFO below, and I was to project this above, okay, so this would bring me all the way to this price level where there is no UFO, and the next ones are quite far away, okay? So what if I focus on those? Okay, what if I focus on those? So that would be the distance. If I project this below, this would bring me to here. It's kind of like we're playing with Murphy's Law now, where, this, has a little bit of space there, isn't it? So anyway, I guess it's not too far to go to 43.5 instead of 43.0, something like that. And therefore, this would be the range that we want to capture. Now, I guess you all agree that this is a humongous range, okay, humongous. So the only way to make it work is going to be to use pretty far away expiration options, and we're going to have to check that, okay? So it is time for me now to disconnect, actually not disconnect, but go back to a different time frames. I'm just picking 5 randomly to go back to 55. So now TradeStation reloads the standard amount of data, and now notice how the UFOs above will not show any longer, but my line will. Okay, so now I'm going to reconnect TradeStation to the network using dot and then ON for online, and notice that on the bottom we got working off online, which implies I'm going to have to retype the password, and the moment we do that, we're going to be back online and everything will be back to normal, okay? Oh, I got this message yesterday. Not sure what that is. Okay, I need to verify it's me. Yes, it's me. Okay, great. So anyway, so let's go for it. So LVS. Okay, since we don't have too many UFOs to choose from, and we saw that the only one we can use are very far away. So what I'm going to do is I'm going to be pragmatic and instead of starting planning to trade using the shorter expiration date, blah, blah, blah. So instead, I'm just going to look at which expiration date pays me at least 35 cents for the 75. So that's what I'm going to do. Knowing that the next earnings will be somewhere in July, okay? I'm going to start with May 21st. It's a monthly expiration date. It should be quite liquid. And even with 29 days, I'm not confident I'm going to be paying enough, okay? Because, again, it's a very far location, okay? But anyway, we're going to try. And yes, so I was right. We get 18 cents only if we use May 21st. So then we're going to go ahead and explore what happens with May 28 for the 75 strike. And that one pays okay, that's not realistic. 123, that's not realistic, because notice the bid and the ask price have a tremendous spread, denoting a major massive lack of liquidity. If we look at the monthly expiration date, notice how we got 17 and 20 is liquid, but notice how that May 28 expiration date have no one traded compared to other expirations. So we're going to look at 4th of June, even though it's looking like if we're going to make this trade work, probably it's going to be 18th of June, which is going to be the next expiration date. So we are basically doing a 2-month iron condor, which, you know what, is going to be fun if we do it, because it's going to give us plenty of opportunity to learn about trade management. Now, the 4th of June does not provide options beyond 67. And also we can see this lack of liquidity. So I would not want to touch it. And therefore, it's going to be 18th of June if it works. And the 75 provides 46 cents, okay, which that is indeed above 35, which is our minimum. So with that in mind, I'm just going to click Analyze and Sell an Iron Condor. Okay, I just want to enter the Iron Condor in the system so I can have a simulation to calculate where is +1 standard deviation and where is -1 standard deviation. And that happens to be 69 and 50 something. So 69 and 50 something, okay, is more or less here. Okay, so style, new parallel. Let's do it again. Here we go. And something like that. I think I said 69, isn't it? So yeah, well, 68, 69, and 51. So yeah, I got 50 something. So again, those dotted lines represent where price should be based on probabilities from now until that expiration date in June. We are selling options way above and way below. So from a probability point of view, that sounds absolutely beautiful. Now let's be realistic, okay? Probabilities are probabilities. We saw trades move fast against us, so we're not going to get overconfident, and what we're going to do is to apply the rules religiously and see if the trade passes the filter of our methodology or not. The issue I was identifying when looking at the option chain is that above 75 I go all the way to 80. So in other words, this trade will have minimum $500 of risk. I will not be able to make it less than that because of this large distance, okay? And then, of course, I cannot use July 16, okay? I cannot, because then I may run into earnings, okay? I may run into earnings. Of course, I will get more premium, but now I may have the earnings problem. So it's looking difficult, guys. It's looking difficult, but we're going to try. Okay. On the bottom part, we are dealing with the 40, let's call it 45. So if we look at the 45, well, actually we can even use 44. But now here I am very disappointed, very disappointed, because liquidity is basically gone. Totally gone. 30 to 7, 76 to 6. Yeah, it's liquidity stays all the way to 47, but below 47, or actually 46. But below 46, it's absolutely terrible. So yeah, so unfortunately, we're not going to be able to do it. It's a shame. It's a shame. Of course, this would have been a trade that would have made money very slowly with a long expiration date. But from an educational point of view, we would have done so many adjustments and tweaks and damage control if needed, right? So that would have been a very nice one to practice together, but doesn't meet the rules, so we're not going to do it. So anyway, so after looking at all those different possibilities, okay, so basically we got nothing in the list, okay, and therefore for the remaining time in the session, I'm going to be focusing on directional trades, given the fact that we didn't find what we needed, and while we need it, we're not going to force it. Two choices at this time: call it a day and go back tomorrow to find what you need and trade that. And once your portfolio is balanced with negative and positive vega, then start directional trades. Or maybe you are a bit more aggressive and your trading plan allows you to, and then you open the door to do directional trades combined with non-directional, while your non-directional trades are not fully balanced or hedged from a Greek point of view, which to me is fine. Because to be honest, even if I didn't have COP in the account and I had an opportunity to go either long or short, I would do it. Again, that's my mindset. That's who I am as a trader. That's part of my trading plan. You may be more conservative than me and it's fine. You may be more aggressive than me and it's fine too. I'm just saying, don't do it just because. Make sure you have a rule around to justify to yourself or to give you permission to yourself to either take a trade or not to take a trade, okay? Hey, Jeff is with you. Wonderful. How are you, Jeff? Very nice to hear from you guys. We need to chat. It's been a long time. Very good. So anyway, so let's continue with this approach, okay? And then I'm gonna be looking at opportunities to go short. Why? Well, while the S&P is in an up climate, it may have to take a break at some point. And in this sense, I would like to position myself to the short side to catch a trade and hopefully make a profit on the way down when that happens, okay? So I'm going to start looking at those particular opportunities, starting from Netflix, even though I don't think that one will work because earnings are around the corner, if I'm not mistaken. Actually, earnings just happened, of course. Yeah, I just got confused. Earnings just happened. It was like, I think it was like 7% down or something like that. Major gap on earnings. Of course, while the climate is perfectly confirmed, our reference point for a trade short is 532, which is right there, which is quite far from where we are. And on top of that, there is no UFO. So no time to spend with Netflix, okay? I'm going to continue with more opportunities. At the same time, we've surpassed by far the equator of the session. So I'm going to go ahead and say goodbye to the ones that you are attending the session from the public streams, and I will see you next week. And for the ones of you attending the session from within our website, tradewithufos.com/live, you don't need to do anything. We just continue as normal. So you guys take care. See you next week for the ones out there in places like Facebook, YouTube, and so on. So the next trade we are looking at is Carvana with earnings on 5.6. That is quite short term. That is quite short term. Maybe just a bit too short for a proper options play. So let me see if I got something else. So we're looking at